Okay. Hi, Manish Poushie. How are you?
Hey Ingrid, what's up?
So, Manish, you run an amazing fund called Awesome ROI. Tell us a little bit about your fund and what got you to start running it.
Yeah, so I'm excited to be meeting you, first of all. And Awesome ROI is a 506c fund, Reg D, and we are based out of Phoenix. This fund basically does a lot of, business acquisitions, a lot of real estate, commercial real estate acquisitions. And we do only acquisitions in the state of Arizona at the moment because the state is doing so great that we have so much to acquire before we go to other states.
Yeah. So, your focus is in Arizona right now. How long have you been in Arizona and what types of opportunities are you seeing right now?
Well, I've been in Arizona since 2012 and in Phoenix 2015. And since then, we are acquiring triple net uh, investment leases, whether it's warehouses, shopping plazas, or you name it. And we are acquiring profitable businesses, whether it's construction, laundromat, or convenience stores, anything that makes us and our investor money, we are acquiring it. And you know right now I'll say 50 to 70 mile radius where I live in Arrowhead, close to Peoria, Glendale, is all my acquisitions are here. And the other thing is I have 70 plus employees working with us in my company. So that's another reason we don't want to go outside Arizona, because we have a team who's focused and who's very much involved in day-to-day operations, day-to-day, management of our acquisitions, our businesses, and all that.
Wow. So you are really focused in the heart of Arizona, given the fact that you're staying in the radius of Maricopa County, really. So that's fantastic. Tell us, Manish, how did you get started and tell us a little bit about yourself and how you landed in business acquisitions.
Well, honestly, I came to United States in the year 2000 as a .NET programmer or a software engineer. And then Y2K incident happened, and my job was gone. And I was not doing much for a couple of months before I started working in a cell phone. One of my friend owned a cell phone kiosk in one of the mall in Oklahoma City, and I went work with him, and I realized I can do that of my own. And honestly, I at one point I had 28 such kiosks in different malls in Texas, New Mexico, mainly New Mexico, in every mall of New Mexico, Colorado, Utah, and only Flagstaff in Arizona. And that time I was living in Texas, and I used to have all and all my employees were taking care of my stores, my kiosk, and I used to go open a kiosk in the mall, find a guy in that area, train him, and watch him how he does it, and then I used to leave, and they used to run my store. So this I'm talking about 2003, and that's when I realized, I have an entrepreneur mindset, and if I can run 28 stores, 28, 30 people working, and I was hardly, came to this country 2, 3 years ago, and I'm doing such a big job, and that gives you a confidence. That's where I realized I don't think I'm meant for job. I should be doing businesses, and since then I never look back. And
That's awesome.
that's my journey. And then I did so many businesses, from motel, running a motel, running, a trading company where I was shipping scrap metal from United States, Mexico, Canada to Asian countries. And then I did e-commerce. Yeah, there was, and then the COVID happened, and I ended up starting acquiring businesses because my e-commerce business kind of take a hit, in the sense the containers or logistical problems happened. There were not containers coming from Asia. So I realized I cannot rely on one business. Since then, I have multiple businesses, multiple acquisitions every now and then. I'll say post COVID is what I'm doing.
That's amazing. So what I hear from your story then is that you know how to pivot. You know when to change, correct your course when something is happening economically. So your investors, that's the type of person they're investing in, it sounds like.
Correct. So pivoting is not a bad word. I sincerely believe one should pivot if things are not going your way or things are not going the way you expect. And there's nothing wrong with that. And as long as the pivot doesn't harm your existing lifestyle or your structure, it's always good to pivot. Yeah, so as I said, I acquired a lot of convenience stores and liquor stores and laundromats. Um, the reason, the logic behind was, when COVID happened, my e-commerce business, I was relying on offshore suppliers, whether it's
Mm.
China or India. And what if COVID 2.0 happens, or a situation like this where your supply chain takes a hit, or inflation? All those factors are adding so much to this. And if you're relying on one business, you don't know what will be the situation tomorrow. But now I have so many stores, so many laundromats, and so many other businesses, and they are running 24/7. Few of them are 24/7. So I know I'm making money while I'm asleep, and that's what's needed. Yeah, it takes time, but why? I mean, I'm not in rush. I'm okay.
Yeah.
you know, I would like to add more. Now I know I can do stores, laundromats, or shopping plazas, acquisitions. I can do it good. And triple net is really good, Ingrid. With triple net, you don't have to worry about insurance, property insurance, or property taxes, or HOA, or maintenance. None of my tenant ever calls me for anything, whether it's a plumbing issue or HVAC issue. It's all on them. I just collect the rent. And in fact, in holidays, I was telling someone yesterday, like, we on one of the shopping plaza, we have to put holiday lights, and that also we took the money from our tenants. I didn't pay even a penny out of my pocket. So triple net is really a good thing. And I want to acquire more shopping plazas. I have close to 20-30 deals in my pipeline. And I was telling you, I guess, the other day, uh, the deals are coming to me. I'm not going after them, because when they see you closing few plazas or strip centers, these brokers or sellers, they call you, and they figure it out from Crexy or CoStar or LoopNet, whatever. And they reach out to you, and they tell you, hey, I have a similar plaza what you acquired. Would you like to have a look at it? So it's kind of, I tell people, take a first step, then basically the wave will take you where you can't even imagine.
And you as a fund manager, what should investors expect the types of philosophy you have for these investments? Because it sounds like you're choosing a lot of recession-proof businesses. What's your overall philosophy on the types of businesses you're focusing on?
I want investors to come with the faith mindset, not a fear mindset. That's first thing I'm asking them. I am a GP and they will be my LPs, and they have to have a faith. They have to do their due diligence. They have to look at my existing businesses. They have to do all that. This one gentleman, he was a 1031 exchange investor. He's from Washington. Excuse me. He invested 600K in one of my shopping plaza, and he was coming practically every week to my to the plaza we are investing in. He went to each and every store of mine, to each and every business of mine, to see how I'm doing, how my employees are doing. So they go to that extent, and that's okay because you are investing your hard-earned money. I really want you to do your due diligence, and not only do deep due diligence, because it's money we are talking. And but at the same time, you have to have a faith that we are running a fund where we respect our investors money, to the point we don't want them to be a 10, 12, 15% kind of a return investor. We want to delight them. They will be delighted if they invest in our fund. How? First of all, no two investments are same, so I cannot say. But this gentleman, 1031 exchange, I gave him an exit and he made 33% annualized return. So I'm not saying every investment is going to be the same. It could be plus, could be minus, but we make sure our investors are taken care and they come back to us for more investments.
That's wonderful case study. Amazing. So tell us, so when an investor funds, or excuse me, when an investor invests into your fund, how should they expect to, what's the target payout and how should they expect to be distributed to?
Well, for details, I have to refer you to my PPM, my private placement memorandum, and it states everything. So we pay, how we are different from others. First of all, we pay our investors monthly. From the month one, they will get their pref, and pref check depends on the level of investment. We have three different classes of investors: A, B, C, and people who invest from 50 to 100K get 6% return pref annualized monthly. And then 100 to 250K is, I have to see what is there, but PPM states all that. And then 250 to onwards and above gets a better pref every month. On top of that, every quarter we give them waterfall returns. Waterfall is, most of our investments are 70/30 LPGP split, where, um, you know, after paying the senior loan, after paying the pref, after doing all the expenses, whatever is the profit, our investors get 70% of that, and we
Wow.
take 30.
Hmm.
Uh, and then once 15% annualized return is achieved, then it goes to 60/40. And once 20% annualized is achieved, then we go after 50/50. And in that regard, I have seen most of our investments, our investors get 30% plus annualized return. And the whole period we are asking, even though we are asking 3 to 5 years, we so far we have given our investors return, exit within 24 months max. This 1031 exchange investor person, we gave him exit in 12 months. And you have to keep money for 1031 for 12 months. That's a 1031 exchange requirement. Otherwise we were ready to give him exit even prior to 12 months. But my point is, it's a short term investment, but our PPM clearly says 3 to 5 years whole period.
Got it. So you work flexibly with your investors if they need to, but your overall goal and expectation is generally between 3 to 5 years hold.
Correct. Either we replace them with a different investor or we take an exit. It all depends on the situation at that particular time. If the market condition is good, you take an exit. If the market conditions are not that great, then you basically replace him with a different investor, or buy him out, or
Mhm.
there are other different ways you can do that.
Wonderful. And then as an operator, is your philosophy acquisition, stabilize, refinance? Is that your typical process for what you're focused on?
Correct. At this point, we are acquiring and stabilizing and refinancing. I mean, so far that's our strategy. But couple of times we have taken an exit, like this warehouse where we are sitting right now. I sold a couple of months ago, and we got this, for example, for $400,000, and I took an exit at 1.6 in 3 years, which is almost 4x. So it all depends on the market conditions, demographics, and the situation, what kind of business acquire. You cannot equate a commercial real estate, let's say warehouse, with a strip center, or strip center with a convenience store acquisition, or laundromat. They all have different, but the bottom line is the same, that you acquire, you stabilize, or then you either refi or take an exit.
Lovely. Wonderful. Is there anything else that your investors should know about Awesome ROI so that they can take that leap of faith forward to invest?
The biggest advantage of investing in Awesome ROI, especially for Arizonans, they are investing in their own state. We are not we are not investing in Texas or Florida, even though those are great states to invest in today's time. But we are so focused in Arizona. As I said, we have a team of 70 plus people working with us. We are fully equipped to go to the next level with the kind of team we have. And second, we are paying monthly distributions. We are not like quarterly or annually, or once the business is stabilized then we start paying, none of that crap. We make sure we take care of, they have done their job, they trusted us with their investment. Now it's our time, it's our role to pay them on timely basis, and we have to respect that. Third and important, most important thing, your capital, your principal amount is preserved at all times. We are not going to be reckless with your principal. We are not going to be investing in anything or everything comes our way. No, we make sure we are investing in businesses that not only perform, they operate, they are providing ton of profits. And we make sure your principal is preserved, you are doing good, and you are not only getting distributions on time, you're getting waterfall profits on time. And we want to delight you. As I said, other funds, they might be exciting their investors, but we are one step ahead. We want to delight our investors so that they provide us more references, more investors, they tell others to invest with us. Basically, they become our loudspeaker.
I love that. That's awesome.
Yeah.
Okay. So if somebody wants to invest with Awesome ROI, where should they go to find out more information?
So they can go to awesomeroi.us. It's .com is also there, but my email is deals@awesomeroi.us. So deal with S, deals at awesomeroi.us. And feel free to send us an email, and we'll get back to you within 24 hours. We are not gonna sleep on your email and don't reply. We reply all our emails within 24 hours. Or you can find us on LinkedIn, Awesome ROI, or Facebook, Insta, everywhere. We go by Awesome ROI.
Wonderful. Well, thanks, Manish, for taking this time to explain to investors why they should invest in Awesome ROI.
Thank you, Ingrid. You have done a good job of interviewing. I appreciate it. I'll see you soon.